Piet Viljoen is with us back home in Cape Town after a wonderful week in the Drakensberg last week. Piet, lovely to have you at the BizNews conference, and the feedback we've got from your presentation, as always, was excellent. Today, though, we're talking to a broader, wider audience, and one of the things that is very much in the news right now for the BizNews community is what happened in court yesterday, where the application by Bernard Mostert and the Tekkie Town guys to have, the pre-liquidation hearing for Steinhoff went very much in their favor. And now the liquidation hearing begins on Thursday. I remember at the previous conference, you told us about owning Steinhoff Prefs, and I think you also have some Steinhoff ordinary shares. And there are tens of thousands of other South Africans who also own these shares. There's big trade in the stock, as we notice on a day-to-day basis. If Steinhoff were to be liquidated, in other words, if the Tekkie Town guys were successful, would that not be a bad thing for the Steinhoff shares?
It would, and I think you saw the reaction yesterday with Steinhoff declining by 20% from, I don't know, 380 to under 300 at one point. If you look at Steinhoff right now, it has a whole bunch of pretty good assets, but it has lots of debt against it and lots of potential legal claims against those assets. And the equity portion of the capital structure is a very thin sliver that's left. So if you get another claim into that capital structure, it will reduce that equity portion of the capital structure even further. And because it's such a thin sliver, any significant amount there could make it go away completely, so that equity holders have nothing left. And the problem is this new claim that's come in by the Tekkie Town people is such that it, if it forces a business into liquidation, you generally don't get good prices for the assets when you sell them, because that's what you have to do. You have to sell the asset and satisfy all the creditors and anybody else out there. And generally, in such a fire sale event, you don't get good prices, which reduces the value of the equity even more. So, where the value of the equity in the past was fairly uncertain and could vary in quite a wide range, with this new additional claim looking like it might even be successful, equity holders might end up with nothing. That's possible.
And you can't blame the Tekkie Town guys. They sold a good business into Steinhoff, and suddenly their good business was worthless because of the fraud that went through, misrepresentation, they claim. They want value back.
I disagree with that. I think you can blame them because they had the choice to take cash or paper when they did the deal. And at that time, they were greedy enough to want to take the Steinhoff paper, and they took it. And as with anything in life, it's always caveat emptor. They took the paper. Lots of people were buying the shares at that point, and now everybody's saying, "Oh, but we were fooled," and this, that, and other. But I don't have a lot of sympathy for that at all.
Were they able to take cash? I was under the impression they didn't have that option.
When you negotiate a transaction, I guess you can negotiate cash, but they were offered. The problem is they were offered such a high price for their business, but it was on the proviso that it was in shares. So they were greedy enough to take that very high price for the business. They were by far overpaid. I remember when that transaction was done, everybody said it's crazy the sort of price they're being paid for Tekkie Town. And I guess part of negotiations was, we'll pay you this very high price, but then you have to take shares. They could have maybe accepted a lower price and taken cash. That could have been an alternative. Who knows what went on the negotiating tables, but I don't think the blame is 100% on the Steinhoff side.
So you are not, obviously, from what you've just said now, sympathetic towards the view from Tekkie Town that Steinhoff needs to be liquidated.
No, I'm not sympathetic at all. I think it's just an opportunistic attempt to get some value out of the carcass of Steinhoff, if you can put it that way, by somebody who feels they were hard done by. I don't feel very sorry for them at all. But I can understand the strategy they're employing. I mean, if I was them, I'd probably try to do the same thing. But I don't have very much sympathy for them.
But surely they can, if they were given if they were misrepresented by the people who are buying their business, and they've now discovered, and everybody knows it was misrepresentation, they should at least have the option of getting their business back and cancelling that contract. Because if a contract is misrepresented from the one party, then the contract can be null and void.
Yeah, I guess so. You can argue that in legal terms, but the people who sold their business to Steinhoff were very close to the management of Steinhoff. I mean, these people ran in the same sort of circles. They knew each other very well, and so again, anytime you do a transaction, it's a risky proposition. You pay a price and you get an asset, and you don't really know what's in the asset until you take ownership and you start examining what you've actually bought. It's hard to tell up front. So there's always risk with any acquisition, just like when you buy a house and you find out there's something wrong with the house. It's your house now, it's your problem.
But if somebody cheats you on the house, if somebody actually builds a paper wall and tells you that it's a brick wall, or puts paper over that wall, and you discover it afterwards, you've got a claim against them because they've been dishonest.
Yes, but the other side of the argument is the price they were offered for Tekkie Town was so high that they probably should have smelt the rat. So that's why I don't have much sympathy.
Well, it all begins on Thursday. If they are successful and if Steinhoff is liquidated, what happens then to the shareholders or people who own Steinhoff shares?
Well, if Steinhoff's liquidated, I guess that there's a good chance. And, these numbers are so uncertain because you just don't know how they're going to pan out, because the other claims still need to be settled, finalized as well. So there's a whole bunch of legal claims against the business. On top of that, there's a liquidation proceeding. On top of that, there's debt. On top of that, in a liquidation proceeding, assets are sold almost on a fire sale basis, so you get less value for the assets. So there's a lot of moving parts here, and it's hard to say that equity is worth this or that. It's not something I'd want to put any money into at this point in time.
So would you own those Pref shares and the Steinhoff ordinary shares going into all of this confusion?
So the preference shares are senior in the capital structure to ordinary equity. So I think they're safe. Equity, no, I wouldn't want to own that now. Even in the bundle of twigs, as I call it, because I think the chance of it going to naught is actually quite high at this point.
And raised due to yesterday's court judgment.
Yeah, the zero outcome was always there, but I think in an orderly transaction where creditors are satisfied, where claimants are satisfied, and everything happens on a orderly time frame, I think the equity holders could have received something and something of value. In a liquidation proceeding, I think all bets off.
Okay, so if you owned Steinhoff shares today, you would probably be looking to sell them.
If I had owned, without giving any advice to shareholders as what to do with their shares, I don't own Steinhoff shares at the moment. But if I had owned them today, I'd probably think hard about selling them. Yes.
Very high risk. Piet, something else that's been interesting in a South African context has been the discussions over NPAS. Now, we've had conversations on this score. A group of asset managers some time back felt that NPAS management were not doing a good job and that they should unbundle the 10-cent shares.
Yeah.
You don't own NPAS shares, so you wouldn't have been part of that conversation. But your firm, Counterpoint, were they part of that conversation?
Yes, Counterpoint was part of the conversation, and Counterpoint as a firm owns NPAS shares in some of the funds, not the ones I manage, but in some of the other funds. And Counterpoint signed the letter requesting a revision of the transaction.
And I'm asking this because NPAS has now just concluded another big transaction of 70 billion rand. Bob van Dijk reckons it's fantastic, and certainly in Business Day this morning, he has the ear of somebody who's equally enthusiastic about the transaction. How are you seeing it?
Well, I think anybody who does a transaction always thinks it's fantastic. I think 100% of transactions that are done are thought to be fantastic by both the selling and the acquiring part. I mean, that's just human nature. I think time will tell. I think making acquisitions to grow your business is a highly risky strategy. As we discussed at Steinhoff, you never really know what you get. And buyers tend to overpay in their acquisition. I mean, that's just how life works. Buyers tend to overpay. Very few acquisitions are underpriced because the seller knows the business a lot better than the buyer. And on top of that, if you look at this fintech type business, payments type business that NPAS bought, they've paid higher than as enterprise value to sales, however you want to express it. They've paid higher than average multiples for this sort of business. Granted, it's India, big population, big market, low market share. So there's all those sort of tailwinds you might build into it. But that thing has to do really, really well over the next 5 to 10 years to justify the purchase price. So I think it's risky. It's and you know, having said that, I think the seller knows the asset better than the buyer, and a minority shareholder knows even less about it. So it's very hard to sit here and criticize and say it's wrong, this wrong, that's wrong. I mean, these are good business people, and they think they're doing a good transaction. So let's see how it works out. But it's not something I would pay a premium for to take part in.
And your colleagues at Counterpoint who do own the shares, what's the morning meeting discussion on that acquisition?
Look, we have differences of opinion on that. But having said that, a lot of the funds that own NPAS in the Counterpoint stable and in most other houses are benchmark oriented. So they have to stay fairly close to the benchmark. And NPAS is a big part of the benchmark. So a lot of people who own NPAS actually don't like the share, but they have to own it because it's such a big part of the benchmark. So there's always that dilemma. Fortunately, in managing a value fund, the Counterpoint Value Fund, I disregard the benchmark completely, and I just try and buy cheap shares. So I'm not subject to that dilemma, which is a fortunate position to be in.
Pete, just to close off with, you did give us some insights into your bundle of sticks, some more sticks that we could add to the bundle. Some, like Avenge, have been spectacularly successful. Not all of them will be, as you continue to wave a flag about. Which ones can you tell us publicly are worth looking at to include in the bundle? I remember Baldwin Properties.
Baldwin Properties, I think it's worth looking at. They've just done a BE transaction, which, like most BE transactions, is value dilutive, but that is the reality of doing business in Africa. You have to do it, and especially in the type of business they're in, they have to work very closely with the public sector in terms of roads infrastructure, electricity infrastructure, to get residential development up and running. So they have to have that, and whichever way you structure these BE deals, it is dilutive to the shareholders. But again, as I said, that's a cost of doing business, and I think that's more than discounted in the current Baldwin share price. So definitely want to look at. Another one that reported recently, Master Drilling, generating very good cash flows on very low multiples. And if you read the Wilson Bailey Holmes, Avenge, and Murray and Roberts results, I think there's construction activity, more and more construction activity happening, general construction and in the mining sector. If you read the mining companies, the Impalas of the world, Amplats of the world, if you read their results, they are spending more, not a lot more, but they are starting to spend more on expanding their productive capacity and investing in expanding their productive capacity, which is good for those sort of companies like the drilling companies and the mining companies. So I think there's upside there, potential upside there, but it is a cyclical environment, and there's no guarantee about it.